This video explains about bank reconciliation statement. It also contains 4 illustrations and solutions. It is in Chapter 1 named Fundamental Principles of Accounting of the textbook, Financial Accounting. This is more suitable for B.Com, B.B.A, M.Com and M.B.A of all universities of India and foreign countries. It is suggested to study through laptop. Presented by Dr.M.Wilson. Bank Reconciliation Statement. Bank reconciliation statement is a statement to reconcile the balance of cash book of a firm and the corresponding balance in the bank passbook maintained by the bank. The firm maintains a cash book with bank column. All the transactions related to bank are recorded in the bank column of cash book or in a separate bank account maintained by the firm. Simultaneously, these transactions are recorded in the customer account of the bank. The copy of it is given to the customers in the form of bank passbook. For example, when cash is deposited into the bank account is debited in the firm's book and the bank credited it in the firm's account passbook. Hence, the debit balance of the bank account in the book of the firm means credit balance in the book of the bank. Sometimes, these balances may not be equal due to the delay in postings to any one of the books. Hence, there is a need for reconciling these items which affect one account and no other account due to the delay in posting. Causes of difference in the balance of bank account and the passbook. 1. Check issued but not presented for payment. A firm may issue check to parties. When the check is issued, it will be credited in the bank account of the firm as soon as it was issued. But it will be debited in the passbook only when it is presented for payment and the actual payment is done. Hence, the balance in the passbook will be more than the bank account. For example, check paid to X for 30,000 rupees. The balance in the bank account after the issue is rupees 2,10,000. But the passbook will show a credit balance of rupees 2,40,000 till the payment for the check is done. 2. Check deposited into bank but not collected and credited. The check may be received on account of credit sales. When the check is received, it is immediately debited in the bank account of the firm. But it will be credited in the passbook only when the check amount is collected after it was deposited into the bank. Hence, due to this, balance in the passbook will be less than the balance in the account of the firm. For example, the firm received a check for 50,000 rupees from Y on account of a credit sales. This is posted in the bank account or bank column of the cash book on the debit side. The balance of the bank account after this posting was rupees 2,70,000. But the posting on the credit side of the bank passbook is done only after the check amount is collected from the concerned bank of the customer. Hence, the passbook shows a balance of rupees 2,20,000 at present. 3. Bank charges and interest on bank overdraft. The bank charges, for the collection of check or other services rendered by it, are debited in the bank passbook. Similarly, the bank may debit the interest on overdraft. It would be credited in the cash book only when the intimation about the charges is received from the banker. 4. Interest or dividend received by bank on behalf of the customers. Dividend or interest on investment may be received by banker on behalf of the customers on the basis of the standing instruction of the customers. It is credited in the passbook immediately after the receipt of it, but it may be debited in the cash book only when the intimation is received from the banker about such receipt. 5. Insurance premium or other payments made by the banker on behalf of the customers. The banker may pay insurance premium or electricity bill or other payments on behalf of the customers on the basis of the standing instruction by the customer. When payment is done, it would be debited in the passbook. The credit on the cash book is done only after the receipt of intimation from the banker. Procedures for the preparation of bank reconciliation statement. The procedure for the preparation of bank reconciliation statement is stated as follows. I. Consider any of the balances, either bank balance or passbook balance, for adjustment. 2. Identify the transaction which affects only one balance. For example, the check deposited into bank will affect the bank account and not the passbook. Such kind of transactions should be considered for adjustment. 3. Add those items which increase the balance of the account which is not considered for adjustment. If bank balance is taken for adjustment, add items like dividend received, and those items which decrease the balance of the account which is considered for adjustment. If bank balance is taken for adjustment, add items like check issued. 4. Deduct those items which decrease the balance of the account which is not considered for adjustment. If bank balance is taken for adjustment, deduct items like bank charges, and those items which increase the balance of the account which is considered for adjustment. If bank balance is taken or adjustment, deduct items like check received from a party. 5. The balance derived after all such additions and deductions, the balance of the account which is not taken for adjustment is known. Illustration 1. The cash book of a firm showed a debit balance of rupees 2,90,000 is on the 31st of March 2024. But the balance shown by the pass book was not same to the cash account due to the following reasons. 1. Check issued to G for 43,000 rupees was not presented to bank for payment. 2. Check sent for collection for 52,000 rupees was not yet collected before the 31st of March 2024. 3. Bank charges of 4,000 rupees was not entered in the cash book. 4. A check for 17,000 rupees sent for collection was returned as unpaid. It was not recorded in cash book. 5. A payment done by a customer for 13,000 rupees directly into the bank was not debited in the cash book. Prepare the bank reconciliation statement. Solution. Bank reconciliation statement is presented here. Illustration 2. Prepare bank reconciliation statement from the following is on the 31st of March 2024. 6 informations are given. Solution. Bank reconciliation statement is presented here. Illustration 3. Prepare bank reconciliation statement from the following is on the 31st of March 2024. 8 informations are given. Solution. Bank reconciliation statement is presented here. Illustration 4. X & Co. has two accounts, namely Account 1 and Account 2 with W.D. Bank Limited. The balances of their accounts as per the cash book is on the 31st of March 2009 are, Account 1 rupees 3,70,000 debit balance, and Account 2 rupees 2,90,000 overdraft. The balance of these accounts is not same with the balance of the pass book due to the following reasons. 7 informations are given. Solution. Bank reconciliation statement of Account 1 is presented here. Bank reconciliation statement of Account 2 is presented here. Note. Adjustment 7 will not affect any book since the wrong debit in Account 2 was simultaneously credited.